everybody. Welcome to TraderMerlin Show. It is your Friday edition. It is the weekend edition. Yes, my favorite day of the week, actually, because it means I get to have a nice, frosty, cold beverage. Cheers, everybody. I hope you did well today. It was actually a fantastic trading day. I'm going to have a quick sip, and then I'll tell you what I'm drinking today, which is a good one. Today was actually one of those days where almost every single thing that I did trading-wise went right. All my options expired worthless. I had a massive day in my crypto holdings. Had some great intraday trends on an intraday high breakout on the QQQ. Just things were fantastic. So for that reason, I'm going top shelf today. We've got the old Blantons in the house. You can see I rarely drink it. It's a special bottle, but today is definitely worth it. So I hope you all had a great trading session. Made a little bit of money out there. Went into this weekend with, I guess, high hopes and optimism. It's kind of tough to say given what's been going on over the past couple weeks. So let's start there. I guess there's my graphic for today. The reason I have it built this way is really the background. Today was predominantly a tech issue. You look at Google, you look at Amazon and Facebook, almost all the tech stocks were really rallying heavily, and that brought it up so that most of the tech heavy indexes were just ripping to the upside. So it was awesome. Great day. Big Eb, I thought you were golfing today, buddy. What are you doing here? Shouldn't you be on the? Are you on the back nine already? So let me just start off with what happened out there in our markets today. And this is probably going to be a shorter show just because I'm not going to go through all the earnings announcements. It was fairly mixed. Obviously, Goldman Sachs was the big disappointment this week, but today you had a lot of financial firms beat it. Jimmy, I got your email. I'll respond to that one directly. Thank you very much for the bottle of whiskey there. We'll figure out how to get that over here. And here is starting from the bottom, working our way to the top. Almost everything was green today, and it was a pretty good, convincing green as well. Even though you have this red candle on gold today, gapping up and showing a red candle, gold was still positive, 0.24% on the day, 1928. I still am very confident, as is Scott McCormick, that gold will continue to trend higher, although part of my gut feeling was we should see a pullback here in gold, but hey, if it keeps on ripping, fine. I'm actually wanting to... I was expecting it to sell off a little bit. Therefore, on Monday, I could maybe sell some puts against GLD. Here's your GLD. Sell some puts and maybe try to shoot for that 174 mark. But if it keeps rallying up here, I might miss that boat and have to focus on something else. So gold looking pretty good. Only a 0.25% gain, though. Now we start to get to the indexes. Dow came screaming back into the origin of the last big move here, right? We had this 3 huge day sell-off right into the origin of the big pop that happened on January 6th. Nice big rally there. And today, bouncing right off of that level, only a 0.97% gain for the Dow futures, but all in all, still a good day for anybody who's holding long. It's a little breath of fresh air coming off the heels of this pretty significant slide that happened over the last 3 sessions, which was roughly a 4.2% slide in 3 days. Here we are moving up 1%. It's like, oh, wow, yay, great. Well, we need a little bit more to really be enthusiastic here. Crude oil also posting some decent gains, 1.39% to 81.73. Scott talks so much about, things turning and the bends at the end. As I'm looking at crude oil here, it was on a pretty pronounced downtrend, starting with this peak back in March of 2022. Lower highs, 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 lower highs. And all of a sudden, we stopped making lower lows. Right? So lower highs and lower lows is clearly the key benchmark of a downtrend. Now, it's only 1 point worth of data, but it's not making a new low that it did on January 4th, right? Didn't break the low from December 9th. So that's positive. And now it looks like we're kind of slowly eating away at this overhead supply level right around $82. To me, that's a pretty positive sign for anybody who's long on oil. It means that the sellers aren't as strong anymore because they're not pushing it lower, and they're actually backing away, meaning buyers may take control here. So this will be something to watch over the next couple weeks, is what happens with crude oil. As the picture shows right now, I'm starting to feel more and more confident. As it came into overhead supply on Wednesday, it only sold off for one and a half days and then came right back to it. If that was a strong supply zone at 82, it would have sold off a bit more than that. Tells me the buyers are in control here, so I'm bullish on crude oil for the next week or so, and we'll see what happens once we get above some of these highs. So that looked pretty darn good to me. And then we get to Index Central. Russell 2000, technically not the best looking chart in the world, up 1.56% on the day to 1874. Again, I still think it's a similar picture to what I just mentioned with crude oil. You're kind of smacking your head above these overhead supply levels. We had that 1900 target. We hit 1900 today, and now you're looking at that 1920. After that, it's like $40 pops, right? You go from 1920, jumps up to 1940, and then you get to 2000. So 2000 definitely in play if we can get above that 1920 mark, and it's looking rather positive. You know, it has not made a new low since June of last year. Is that June? Yeah, June of last year has not made new lows. It's been bouncing across that. Great. We got a big range here, and as I know, since Tom is here, they do those credit spreads, those condors, and get some yield on this sideways action on the rut, and get that 1256 treatment on your taxes for trading index options. Gotta love that. All right, moving on the list, we got the S&P 500 1.85% gain. This is the one that I'm basically building my entire trading plan around. So while I did day trade Qs today, you know, I'm looking at this picture, and I actually thought we were going to get a little more follow through, right? Given the kind of the negativity to the retail sales numbers, I actually expected this to drift down even lower, maybe come down to the upward trending line that we have, connecting those the real body lows all the way back from October 12th, connecting through those lows back in December of last year and even early January. I thought we'd trend back down. What's important here to understand is the history and psychology of price patterns, right? When you look at this picture here, again, it's the spring being pressed together. At some point, that spring is going to pop and shoot out one direction or the other. Statistically, if you look at, I think his name is Bukowski, he wrote the book called The Encyclopedia of Chart Patterns. And if you want, I would highly encourage you to read that book, or at least pieces of it. You can go to Google and type in Encyclopedia of Chart Patterns.pdf, and you'll be able to download a copy of that book and just thumb through it and find out some of the more interesting patterns that you find, I guess, useful. I love pennant formations. I really like ascending, descending triangles, bull flags, bear flags. Yeah, those types of patterns are my personal favorites. But here we have one where it's just consolidating. Typically, when you have these big ebbs and flows, but it starts to, you know, the ripple effect getting lighter and lighter and lighter, ultimately it's going to compress until it doesn't. And when it breaks, it statistically is a higher probability of breaking in the direction of the prevailing trend, which is noteworthy because the trend is to the downside. Now, I don't know if I'm necessarily going to hang my hat on that one. I think before you start to build any big positions, you got to look at this from two different levels here. And I'm sure a lot of you are already doing this. So, if you look at the triangle we have, or the pennant formation here, you could play, if you wanted to, the breakout of that triangle. I will not be doing that. What I will be doing is putting some horizontal lines around the most recent highs, so, and more recent lows. So I'm going to be looking at these two levels here. Those are the blue dotted lines between 3,800 and 4,000. It's a 200-point range. You know, if I can get above the 4,000, all right, then I'll start building a building a position in the Russell, or sorry, S&P. I don't have any S&P at this moment, but I will start building a position. I didn't say big ebbs, I said big ebb. The whiskey has not even hit me, big ebb. Yeah, I mean, you get to get those iron flies working. Oh, the flies, the butterflies, the dragonflies. Too many animals in the trading world. Anyway, I will be waiting for it to confirm that breakout. And some of you may actually look at this level here, and maybe just to make it easy for you, I can draw the most condensed area of it, which will be right in here. Right, and basically saying, if you're super aggressive, you will play I might have said ebbs and flows. Maybe I did. Big ebbs and big flows. You know, if you're really aggressive, you could play the breakouts of that yellow box. Fine, that's aggressive. I think a little bit more passive and cautious would be waiting for it to break the lows. But, you know, going back to David Warner, one of my favorites, you notice the whole number psychology. It seems to be right around 4,000, right around 3,900, right around 3,800. You know, these whole numbers definitely are an important factor in trading and establishing your zones and levels. So if you're real aggressive on the S&P, your range is between 3,900 and 4,000. A breakout above that, start building long positions. I wouldn't say go all in because you just don't know at this point. But if we start to make new highs and start breaking some of these highs that go back to like December 1st at 4,100, then I'll be adding more to it and adding more to it. So it's a good point right now because you know something is coming. We just don't know how aggressive it's going to be or the direction, which is fine, right? Who cares which direction it goes, just as long as I can respond to whatever that market tells me. In this case, I believe, based off of market probability and patterns, it will probably go to the downside. Anyway, let's go up one more. Here's your big gainer on the day. NASDAQ 100 futures, 2.82% gain today. It was gorgeous. And this was an easy trading day, at least for me. And the reason I say it's easy is I was looking at the NASDAQ, well, actually it's triple Q. So let me go to triple Qs here. And I'm going to take it off of, take it adjusted, and let's go to a 15-minute time frame. Well, actually, let's start just one step back, more of an education lesson. You know, one of the things that we talk about is shooting stars, hammer formations, etc. Right? I have specific rules for trading those types. And if you look at today's activity, here is on a snap, I'll put blue lines on the high of yesterday for the QQQs and the low of yesterday. So when it opened up this morning inside that range, like, okay, fine, no big deal. I'll call that an inside day. And I told myself, you know, if it could really have a nice rally because of the way it sold off the last couple of days, you know, maybe going into the weekend has a big rally. If it breaks above that 277 mark, go long. If it breaks down below 273, go short. So essentially, I've done the same thing that I just did with the S&P on a long-term analysis. I just basically said, there's my range, that little yellow box. And if that happened to break to the upside, great, go long. And lo and behold, this really was just a gift that fell in my lap today. I really think I was very fortunate. But again, it just goes back to rules. Notice that the opening half hour, which generally you should kind of stay away the opening half hour. Opening half hour, opened down below, opened in the yellow box, and then just started to rip up, and then just kept on ripping and there weren't any really like major pullbacks during that trading session. So this was it's just a great day for simple trend-based trading. You know, chalk it up to technology as the catalyst for this. Again, let me show you some of the tech firms out there. You had Google was a real big gainer today, 5.72%. Most of that happening right on the open. Unfortunately, I don't trade Google, but I think you guys can see right here. See that hard red edge? I think you guys can all see that. When you have a situation like this, extreme run up right in the open, and then it formed a shooting star, what do? Same thing. Put your price right there at 98.50, and if it breaks down below that, go short. You had a really nice short trade there as well on Google. Easily could have pulled a couple bucks out on Google, but Google was up 5.72% today. Amazon, another tech, up 3.8%. Absolutely love it. Let me go back. This is the 15. Sorry, I'm getting excited. It's the whiskey. Get me excited. Just a beautiful 2-day run, really, for Amazon, hitting those lows a couple days ago, right around 92 and change. Now it's 97. So you got to love a $5 move for Amazon in just a couple of days. You had, I actually didn't look at Meta, but I'm assuming that followed suit. That was 2.37%. Apple as well, posting almost 2% gains, 1.92. So that was the main reason why you saw such a nice pop-up today in our markets. Technology really setting the tone. And I think it has a lot to do with how beaten up it has been. We've had that discussion, you know, where's that buy point for Apple? Where's the buy point for Amazon? I'm still real bullish on Amazon. I'm kind of hoping it drops a little bit so I can buy some more. I'm disappointed at myself for not holding. You guys might remember I actually bought a ton of January calls, which would expire today, on Amazon and Facebook, right? I had 80 calls on Amazon, and the Facebook ones are the ones that really just, I'm kicking myself, because I bought them back here like November 1st or 2nd as it was having this huge slide, and I bought the 105s, which were right here, and now Amazon's trading at 139 today, so that would have been a monster winner if I held it all the way there. I did really well, at least in the short term, but, you know, it looks like tech bit overbeat and now getting a little bit of a breather moving to the upside. Netflix also with their earnings yesterday, or after hours yesterday, 8.46% gain on Netflix. Closed that gap. It finally fully officially closed that gap today. From here, I've actually had questions from people say, is it going to close this gap that goes all the way back to January? Personally, I don't think so. I don't think you'll see it at 513 unless the entire market turns around and really starts to rally. At this point, I just don't see Netflix getting there. I think, Tom, you made a comment that was, you call them the blockbuster, right? Well, I wouldn't call them the blockbuster necessarily. It's just, you know, when you have such a dominant presence in the market, and Netflix was head and shoulders above everybody else. There was nobody out there competing on the level that Netflix was. And then all of a sudden you had Apple TV. And you've got, Disney Plus. And then you got Paramount Plus. And then you got HBO Max. And all of a sudden, the fragmentation just became huge out there. You know, that's the same argument I have for Tesla, is it had a huge advantage in the electric car front. And now all of a sudden, every car maker is making it, which is going to chip away at their lead. Doesn't mean that they're not going to do well. It just means that the glory days when you had these massive highs in Netflix of, $700, probably not going to get back up there, in my opinion. So no, I don't think we'll see it close, at least not this year, that 520 mark. We still have a lot of uncertainty in our overall equity markets, even though we did hear a lot of the members of the FOMC speaking today, right? There were several that were speaking, and they were saying, look, 25 basis points. Lael Baynard, who's the VP of the Treasury or FOMC, was saying, look, we got to do whatever we have to do to get us to 2%. All right, but it seems like more and more people are shifting to that 25 basis point increase. At this point today, there is a 99% probability. Let me just show it to you, because sometimes I talk statistics, and I know a lot of you are going, he's pulling those out of his backside. Nope. I'm pulling it from the CME website where the people are trading Fed funds futures. 99.2% probability we get a 25 basis point increase on February 1st. But here's where it gets interesting. If I go to the next meeting, which will be March 22nd, there is a 79% chance that we get a 25 basis point increase at that meeting as well. But what I find interesting is, if you notice, a week ago, there was a 16% chance of no raise in March. And now it's jumped to 20%. So it's starting to slightly increase of no raise in March. I still think you'll see 25s for the short-term future. At least, I don't think the Fed wants to backpedal so quickly after doing such aggressive raises to the upside. Hey, Jay Best, thank you very much, my friend. Cheers to you. Thank you for the contribution. I appreciate that. I'm going to put that to use tonight. Tonight, I'm on a mission. I'm going to go out. There's a couple places I want to go hit up, have a couple cocktails. So thank you for the drinks for this evening. Normally, I would say I'm taking that donation and it goes to my Libsyn fee to pay for the podcast and my website fee and all that stuff. But that's going to go to the bar fund tonight. Thanks, Jay Best. Let's see. Thanks for all you do. My pleasure. I love it. Been selling hood puts, $8 strike at various expirations between 1 and 6 months. Thoughts, book value is $788. I work in the brokerage industry and think there might be a major value here. So with Hood, my overall thought on Hood as a trader, as someone who's been in the industry for a long time, not really a fan of Hood. I think that if you're a trader, you understand that the model that they're using, selling order flow, is under so much scrutiny that they could get shut down. And if they do get shut down, meaning those rules change, and there was a lot of talk about that last year, about changing payment for order flow, right? A lot of the major firms, that's where they make their money. They sell to Citadel Derivatives and other big institutions, Vortex, and those firms are trading against the customer's order flow. They're not supposed to, but they are. So when I look at the chart of Hood, I'm pessimistic on Hood overall. However, if you're kind of going into the fundamentals, right, and you are looking at a book value, and as you say there, I haven't looked at it, but if you say the book value is $788, all right, well, in theory, their assets should sell for $7.88. So for you, in your perspective, you are you're looking at it going, if I get it at 8 and its book value is $7.88, if they sell at book value, I'll only lose 12 cents. That's fine. I think what's important there, Jay, is as long as the premium that you're getting is offsetting enough of your risk. I do like the $8 strike price here. It's really been sideways. It looks like it's done absolutely nothing. Because of what's going on with Sam Bankman-Fried, remember, I think he has $400 or $500 million worth of Hood. It's tied up in FTX. It's either FTX or Alameda Research. That could be an issue, right? So it's not that one. It's the wild card for you, Jay, is this. I forget the exact number. I think it's $400 or $500 million worth of Hood is owned by Sam Bankman-Fried, but that's owned inside of either Alameda or FTX. Both of those are going through bankruptcy proceedings. So if it gets to the point that the judge says, hey, liquidate those holdings to pay back holders, you could be in a really risky spot, right? Because that means those could potentially come to market and be sold at market. Depends on how they do the liquidation. But that could have a big impact at the south side, right? Having $500 million worth of Hood shares all at once hit the market, boom. That could create a big downside move. That said, if you're getting enough premium on those Hood options and it's in line with what you want, great, hold it. I do think Hood is in trouble just because more people are moving away from them. If you're a smart trader, or not smart, if you're a new trader, you can go to somebody like Robinhood, who gives you access to market orders only. You're going to be filled at the market price. Even if you put a limit, it will be when the market is at your limit price. So to me, that is not a good thing. You have limited markets that you can trade. Oh, but it's no commissions. Well, look, would I rather trade at Robinhood, which doesn't give me very good analytical tools, or would I rather go to somebody like Charles Schwab or Ameritrade or E-Trade, which gives me free equity trades as well? I have to pay for my equity trades there, but I don't have access to futures, better analytics, options. It just, if you are someone, if you're not like a 14-year-old kid who just thinks that I just need to buy whatever my Wall Street Bets Reddit chat room is telling me, you'd probably move on to a different brokerage firm. That said, could they be acquired? That was the big talk track we had last year, was saying, look, Robinhood is in a death spiral right now, but at some point, they do have millions of customers, and those customers could be sold or bought by, let's say, a Charles Schwab, right? If one of the retail firms wanted to increase their books and get their customer base much bigger, which of course is assets under management, or AUM, then you're gonna see Robinhood probably take a nice pop. So I like what you're doing. I do. Even though I'm not a big fan of Robinhood, I think you're selling when it's $9.52. You're selling the $8 put, so it's $1.50 out of the money. Fine. I think I might be an okay buyer at $8 as well, and if it did, I'd just start selling calls against my position and lower my dollar cost average over time. Given that chart, it doesn't feel like Hood's going anywhere. So in theory, what you have, Jay, is a slow income strategy. And I don't know what the rates of return you're getting for selling the $8 puts right now, but yeah, all in all, I think it's okay. But one thing I don't like here, and this is just me personally, you say puts at $8 with various expirations between 1 and 6 months. I wouldn't go out 6 months. I would actually just do it 30 days, because it's not in your interest as a seller of puts or a seller of options to go out that far, right? It doesn't. You don't want to give your buyer of your options time. Time is your enemy if you're a seller of options. So if you're selling puts, 30 days or less, right? One of my rules, I will never sell a put over 30 days. What you're going to get is you're going to get a lot more premium, but it's just, you have to offset that risk. And if you go too far out, 6 months is a long runway. And what happens if this market goes to hell in a handbasket, right? Just bear out the example here. Hear me out. Let's put a vertical line here 30 days away from right now. So let me, there's my vertical line. We'll go right here. And today was January 20th. Options expired. And let's say you go out to March, which will probably be March 17th will probably be the 3rd. Let me just real quickly check here. Sorry, not March, February. So February 17th will be the next expiration for options on the monthly. So we'll put that right there. Now, that's February. You could go February, March, April, May, June, July. Let's go out to July and see where that is. All right, let me just move that over here. And we'll go to, there's June. Now we go to July, which will probably be, I'll just say the 21st, okay? Here's my problem with this. If you sold the 30 days, and that's going to be the blue line on the left, if all hell breaks loose and you see Robinhood, bad news, they declare bank, and I'm just going worst case scenario here, right? Everybody can understand that. Let's say all of a sudden it does this, and it craps the bed, and you're like, oh man, this thing's down 18% in the next month. Well, let's just say it does exactly what the chart shows you here, and it's now trading at 780. Well, you're long at $8 because you would be exercised at this point. You're long at $8, plus you collected your premium. You're not being hurt too bad. But what if it does this? What if it just keeps on sliding and you're stuck? You can't do a damn thing in your shares for months. And what if it keeps going and they declare bankruptcy and all of a sudden it's at 275 and you're like, man, you could certainly cover those options earlier. But I just personally, I know some of you would disagree with this strategy. That's okay. It's just, the way we view things. As I'm selling options, I have to make sure that the risk is I want to protect myself. And the longer you go out as a seller, the riskier it gets. The longer you go out buying options, the better. Hey, Rob, thank you so much. Wow, man. You guys are great Friday. And I love the comment here. That was a really good comment that came through. So I will tell you, Randy says, yo, spend it on an Uber tonight. I do not drink and drive, so I will not be drinking and driving. I'm either going to walk because I have there's 15 cool bars and restaurants within a 10, 15-minute walk from my house. So I will be walking. I might actually ride the electric bike, although it's been damn cold out there. But don't worry, I will not be driving at all. No way. A $20 Uber is way cheaper than a $14,000 DUI with a big, check mark on your record. So no. I'm not going to get that. I'm not getting trashed tonight, guys. I'm just going to go out and have some fun. Let's see. There you go. Cheers to that, Rob. I will drink to it. Absolutely. So, Jay, I hope I helped you answer that question out there. And Rob, thank you very much. Happy Friday, Chris. Good to see you, my friend. So Tom says, my focus is on selling SPX or similar to the rubber ducky, right? I would sell the shorts outside of the recent range and buy protective a few points further out, right? And you know, Tom, you've learned from several people, right? I know you've taken a bunch of OTA classes. You did the Tim Blotzer stuff. I know you did some Corey Lane pieces, and you've crafted by watching different people your kind of style that fits to you, right? I think that's really important. And you know, some people would watch Tim Blotzer's rubber ducky thing, and you know, if you're not a real good risk manager, the rubber ducky thing can blow up in your face if you're trading daily options or trading weekly options. So, you know, you modify it to fit who you are. And I don't mean to deter you, Jay, from selling 6-month options. You're going to get better premium. It's just no one knows what's going to happen 6 months from now with Robinhood. I mean, it could go perfectly sideways and you'd be collecting a lot more premium. Awesome. Good for you. I like to do it, again, 30 days or less and just kind of keep recycling it over and over. Every single put option I sold this month, I mean, and I sold a lot. I have a lot of put options I sold. They've all expired worthless, which is awesome. I actually have a couple positions that are long, and one of those will be taken away. My XLF will be taken away from me. Other ones, I still have the position. I'm selling calls against those. So I'm loving the fact we're not getting a really strong, bullish trending market. It's been choppy. You know, granted, if you look at this chart, it does look like there's been some big swings, but if you look 30 days, it really hasn't been much. Let's go back here and go, let me go put a vertical line on the last time's options expired. So we'll go back here. There's January. Let's go back to December, which I believe it might have been the third Friday. Maybe it was, let me go just real quickly check and make sure exactly what that, it was the 16th. So you go to the 16th. Here's your 16th. Let's put a vertical line on the 16th. So even though you had these big swings, the markets were slightly up today. Over, you know, for the last 30 days, they're slightly up. Not much. I'll give you the exact number from month to month, or at least from options expiration to options expiration. I'm going from where it opened to where it closed. It's a 2% gain. So yeah, the markets are up, but I'm collecting, you know, in some cases more than 2% premium anyway, and I'm taking away a lot of that risk. So, true rubber ducky like trade. I only lose when I'm stupid with stops. Tom, I think you can nod your head in approval with this one. Everybody loses because they're stupid with stops. Everybody, it doesn't matter what you're trading, rubber ducky strategy, you're trading just long directionally on S&P or Bitcoin, or if you're bad with stop losses, you're going to die as a trader. There's really no other way to put it. I've seen it so many times. I know I harp on this, and it's really embarrassing, honestly, that I have to say it so many times to students is, it's not about making money. Today for me was great because I just followed plans. I didn't even have to worry about stop losses because there was never a chance of me being stopped out. There's other days where I might have bought the breakout on the NASDAQ today and it just rips against me. Well, I have to have a stop loss because if I don't, I could lose my entire account on one bad trade. And unfortunately, a lot of people, that's your issue, is stop losses. Most of you are probably nodding at this right now or telling me to shut up in your head because you're like, yeah, I know, it hurts. You're pushing that pain point. Well, then fix it. Don't take big losses. Tom, I'm sure Tom has taken a couple hits by not adhering to a stop loss when he's doing his rubber ducky trade. And do you do that one? Ducky, don't use no stops. I get burned once. Well, you know what, Randy? Good for you that you only got burned once. Because I know people that get burned over and over and over again. And it's that old adage, you know, what's the definition of insanity? It's doing the same thing over and over again, expecting different results. So, you know, there's very few times where you can just violate your stop losses and be rewarded for it. And that's actually the worst thing that can happen to you as a new trader. You set a stop loss, it gets to it, you say, nah, I'll keep it. And then all of a sudden it rewards you greatly. So then every time you're going to be predisposed to not using your stop losses, and one time, all it takes is one bad trade that goes against you and you smoked. All right, well, Jay, thank you for the great contribution and the question. You started a good discussion there. Michael says, I'm kind of wanting to get a sign. Do you think Tesla will pull back after earnings? I sold the 116 puts. It's up right now. I'll tell you this. Let's look at Tesla. So you guys know I had sold a few Tesla. I sold the 120s and I sold the 100s. Obviously, I'm not going to get executed on either one of those, but I made some great 30-day premium. Monday morning, I'm going to look at this and see what happens. I'm kind of hoping that the market just craps the bed Monday and really starts to sell off so I can sell puts and get more premium. I will probably be looking to sell those 100s again. I want to see what the premium is, but I'll be looking to sell the February put options on Tesla. The only worry there is you are going into earnings. I think Wednesday is the earnings day for Tesla. That obviously adds a tremendous amount of risk. Although, I'm looking at these price charts, and just in the last year alone, you're talking a 70% decline in the value of Tesla. Tesla still is selling an incredible amount of vehicles, right? They're not like dead in the water. My gut feeling is that this is just this emotional oversell. This is, Bill Gates unloading and shorting the hell out of Tesla. But I think I will probably be selling some. Are you safe? Well, who the heck knows? I have no idea if you're going to be safe selling those, the 116s. You're pretty close. You're probably all right at the 116. But look, if you saw what happened with Netflix today or last night, that's why we call them the popcorn trade of the day. Tesla will absolutely be the popcorn trade of the day. And while you see the big jump here, look at the swings that happen. Let's go on a 5-minute. I know you guys saw this one yesterday, but here's the extended hours trading. You had monster swings yesterday. Tesla's going to be no different, right? It might not look as severe because this is a $300 stock and Tesla is, 120 or 130. So, it's crazy. You are putting yourself in a situation where you're be doing a nail biter when they report earnings on Wednesday. You're literally gonna be like, I don't know what I do. And I'm debating myself whether to sell puts before. Again, I will never buy options before an earnings announcement because usually the premium is so high. But if people are like scrambling to buy options, I might actually go out here on Tesla, right? And I may sell the weeklies because they report earnings next week. I may sell the weeklies and go out to 110. And I know that seems crazy. Like who would possibly want to buy those options? Hey, there's people out there that are going to buy the 110 puts because they think it's going to just melt down on earnings. And if I can get 1% for the week, I'll probably sell the 100s. And I'll let you guys know Monday. Why does it drop? You mean why does Tesla drop, Rob? Give me more detail on why you say why does it drop. And let's see. Kramer recommended getting out of crypto on January 9th. Inverse Kramer transact. Yeah, he is so ridiculous, guy. I kind of feel embarrassed for CNBC for keeping that ass clown on the air. Like, it's really like, come on, man. He's so wrong. And if you give him the benefit of time and you say, okay, over the next 5 years, yeah, his call might be right. But so many things are off, and it's typically the opposite of what's going on with the market. CNBC should really just say, we're getting rid of Jim Cramer. Here's the thing. He's such I'm going to offend some of you here. I apologize. I know I've done it many times. It's kind of like Kim Kardashian, right? You have a talentless loser who is just a master manipulator of social media, and she is bringing down the morale of women around the world. Just Kim Kardashian alone on how women should be treated, how they should look. I think it's doing an absolute disservice to it. And if I was a TV producer, I'd say, get this trash off the air. However, it's like watching a car crash. You can't stop watching it, and these Kardashians thrive off that stuff. I think Jim Cramer's the same thing. Jim Cramer, in my opinion, is the exact same as a Kim Kardashian, but he's of finance. So even though he's wrong, he does have background. Sometimes he's right, but he's just entertainment, and people love Jim Cramer. Ugh. Oh, it drives me nuts. You got me all riled up. Let's see. Why not wait until after Tesla reports and then sell options, right? Liz, there's the thing. As soon as Tesla reports earnings on Wednesday, so let's go Thursday morning, the premium's going to get sucked out of those options. And that's why people are going to be flocking to buy protection against they'll be flocking to buy puts and calls, right? Because people will go far out of the money. They're trying to do little straddle trades. I capitalize on them. If people are going to be that eager to buy insurance using options for the earnings announcement, I'll go far out of the money. And if I get, executed, all right, I'm going to be, if you look at the 110 strike on Tesla in that example, right? Let's say we come in next week. I'll put a vertical line right on next Friday, right? There's their earnings on Wednesday, Thursday, Friday. This is when those options expire. Literally 5 trading sessions from now. So Monday opens up, and let's say, it starts to sell off. if it's at 130 and I sell the 110s, that's a $30 drop. That's more than a 20% decline. Now, could Tesla drop 30% on earnings? Absolutely. However, I would be happy buying Tesla at 100. So if I can get enough premium that warrants the weeklies at 100, I'll sell them. Because most likely they're going to expire worthless. And if I do get it, I'm going to collect some premium anyway, which makes my dollar cost average, somewhere in the 90s. So I do think you could sell after the earnings announcement, but a lot of that premium will disappear. And as a seller, I want there to be higher premium. Yeah, she's got Margaret. She's got no skills. She's got a fully augment. If you want to inject your face with pig botulism and all kinds of crazy chemicals and fillers and have fake boobs and fake butt and liposuction and all that stuff, good for you. I like au naturel. Give me au naturel. Let's not be fake. Fake people. I don't like fake people. Gary, I'm not riled up. I just it's Friday. I'm having a good time, and this Blanton's is pretty damn good, I must say. Just so you know, I don't know if anybody here is a Blanton's fan, but Blanton's has on the top, they have these horses. And each little horse, I don't know if I can get it close enough for you to see. Oh yeah, you guys can see that right there. At the bottom on that horse, this one says N on it, right? Each horse on this has a different stride, and it has a different letter. So there's a B-L-A-N-T-O-N-S. There's 8 of them. And if you get all of them, I believe you can send them in, they give you a plaque and everything. And Rob is absolutely right. It is way too expensive, but those that know me know I'm never paying retail. I found these actually at a grocery store here. They were selling for $39 a bottle, and I got 10% off, and I bought 6 of them because now these things are going for like 100 and something bucks a bottle because of supply and demand. Yes, I know that. Do they check his trades? Here's the thing, Robert. With Jim Cramer, he says he trades in a charitable trust, and if I was a regulator, this is a huge red flag, right? I would want to know, I would be auditing his charitable trust, because if I'm Jim Cramer, what I would be doing is, if I was Jim Cramer and I didn't care about the law, I would be buying a security in my trust. So let's say, make it up, Tesla. I would buy 50,000 shares of Tesla in my charitable trust. And then I would go live a day or two or a week, a month later on CNBC, and I'd say, guys, booyah, lightning round, buy, you gotta buy Tesla. And I will make the most compelling theatrical, I'm hitting the bullhorn, all that crazy stuff that he does. My dog just looked up eagerly on that one. You okay, buddy? He'll do all the theatrical, crazy showman stuff like a Vegas casino showman to get you to buy Tesla, and it pops. And he's probably selling that in his charitable trust. So his track record in his charitable trust probably looks pretty damn good. But when you work for Goldman Sachs and you got connections in this industry, maybe they turn the other cheek, maybe they look the other way. I don't know. If I was a regulator, it might be one of the first people I go after to look at would be like, okay, let me just see what this guy's doing, because you're so unbelievably wrong in your calls. And if he says buy Tesla, typically the first 2 days, it has a big up move, and then it gives all of it back over the next week or so. High-end steakhouse? Ooh. Oh, I've got them all. I got all the bottle tops now. I collected them all, yes. I haven't sent them in for it yet, but... who am I taking back? Which letter do you have? On this bottle was an N. This was an N. And it's funny because there's actually 2 N's, and one of them has an apostrophe, and you can tell because the horse is different. I have both ends. Took me a while to get there, but I got it. All right, where are we at in time-wise? All right, I'm having a good one today. Lastly, let's talk about this sector, because this has just been absolutely crazy. I did not expect Bitcoin to rally as much as it did today. It's soaring right now. I thought we'd have a pullback. I really thought we'd come back down to 20,000 on Bitcoin. The whole sector right now, let me just bring up my list here. You guys can see on the right-hand side, you've got a couple of these are trash. Oh, man, Render. Are you kidding me? Raphael, if you're watching this right now, damn you. You guys might remember we talked about ChatGPT the other day, which I'm hoping a lot of you have experimented with, traded with, or not traded with, just looked into the future of what AI can do, right? And I think you all would agree it's pretty freaking impressive what ChatGPT can do. There are other programs out there where you can say, draw a picture of a person standing in a field with a two-story barn surrounded by redwood trees. and it will make the picture for you. It's artificial graphics. And my friend who actually talked to me about Render Coin, that's this one right here, was telling me that Render is now incorporating those AI engines into I forgot the name of it, but there's a protocol, a program they use in Render, Octane. It's called Render Octane. They're incorporating in this AI, and he's like, you got to buy some Render, and damn it. I literally talked to him last night at Trivia, and it just absolutely popped up here today. Wow. Dab nabbit. I do want to buy some Render, but big gains. Look, H-bar. We actually reviewed this one yesterday in our Crypto Investor Live class, up 22.7% today. Solana. I bought a lot of Solana here at $13.90. That's up another 17%. So you're seeing some great moves. I mean, my portfolio is doing really, really well today. And down here at the bottom, like, are there any losers? Not too many. Civic, GBTC, the spread there is getting worse. So really not a lot of losers out there in crypto. I'm kind of scratching my head as to why. And I think it has to do with just, remember we talked about there used to be an inverse correlation between crypto and equity markets. Now it feels like totally tied connection. So as the equity markets rallied today, money pouring into these investments in digital assets and crypto. Good to see Solana rocking like this. I always go, I wish I bought more. But again, my timeline's going to be just a few years on that bad boy. So I think I got most of it. Any other questions you guys want me to discuss? We're at 42. I was going to do a half-hour show today, but because Big Eb is here and, I know he wants me to do an hour show, he's probably at the 19th hole right now. I'll answer another question or two. Let me real quickly show you what's happening for Monday. Actually, there's nothing happening Monday. There's really no major news on Monday. Earnings-wise, there's a couple big names, but really the fireworks don't start until Wednesday. Tesla's earnings come out on Wednesday. On Tuesday, you have Microsoft. Thursday, you have Intel. So there are some pretty big heavy hitters, especially if you start to look at things like Freeport-McMoRan as well, for those of you in the mining space. But let's see, what else we got here? Jabez, Nexo had a win with the U.S. regulators. Good. Nexo has been one of the few lending protocols that appears to have kept their nose above board and not get in trouble. However, I pulled everything off of any lending protocol out there. So for those who may not know what we're talking about, there's lending protocols where you can deposit your cryptocurrency and they will pay you interest on it. So some are paying 5, 6, 7, 8, 10%. I have a spreadsheet of over 30 different brokers and exchanges that will pay you to keep your crypto. So part of what I do on a regular basis is I shuffle my cryptocurrency around to get the best yield. That said, I want to pull I don't want to keep it on any lending protocols right now until all this dust settles and regulation hits. Nexo is in Switzerland, so they're a little bit better, I think. But, Celsius has gone under, Voyager's gone under, BlockFi has gone under. I think Crypto.com is probably going to be the next one to go under because they're still paying pretty damn good yields. So I would move it away, but I do like the fact that Nexo is looking good. They haven't had any major issues. They didn't have exposure to Three Arrows Capital. They didn't have exposure to FTX. They didn't have exposure to Terra Luna. So they somehow managed to sidestep a lot of the risks associated with lending. But I hope they come out of it okay, because then I can start moving capital over there and earn more interest on my crypto, get more yield. Coin Bureau released an interesting video on YouTube, ChatGPT. I didn't realize it's not connected to the internet, so it cannot connect to current events. I didn't know that. I'm not sure about that. It's reading constantly information from the internet. We are in a trend up in Bitcoin. Halving already, or do you think this was just some sideways movement? Well, halving is not going to happen for quite some time, right? We're not going to get halving for, I think, what's it, 2024, I think? Yeah, I know, Jabez, me too. Celsius whacked me, so did Voyager. I had collectively about 70 grand sitting in between those two. Hopefully I'll get some money back someday. That's the hope there. We will see. Don't know. But as far as Bitcoin goes, let's go bring up the spot BTC price. Okay, scroll up here, go to B to the T to the C. Another 7-point gain, man, or 7% gain. Holy cow. I'm going to have to look at my portfolio. I'm going to have a couple shots because of today. Let's go, and as far as big picture goes, right? You look at the daily here. We were talking in the CIL about how this is the very logical point, 21,300, logical point for a pullback. I expected it to go. You can see my graphics here. I was actually expecting it to pull back to this level down here. That was because of a rally-based rally right around 19,000. Not only did we not get that, but now it looks even stronger and ripping higher. Notice that we are right now right at an area of supply. So if this one breaks, your next stop's going to call it 24,500, and then your next stop is 31.4. I don't think we're going to get there. I mean, based off of my study of the 4-year cycle, it should be choppy this year and not huge direction. So I think this might be a little bit overdone. I'm not selling any of my Bitcoin right now. That's for sure. I'll be holding it. But, if it keeps on going, great. I'm happy about it because I have a sizable portfolio in crypto. But my gut tells me that based off historical patterns, you'll see this just kind of chop sideways for the next year. And then we get our monster move up there. A big move up. I cannot read the internet, huh? All right, cool. Yeah, I don't know how they're programming in ChatGPT, but it is pretty damn impressive what it can do. I have been playing with it a bit, and I really... yes, it did break weekly supply. Yep. But I feel like cryptos are a bit different, right? They're under a different... there you go. There's your weekly chart. Yeah, we did break it, and you could argue that this is the bend at the end. Well, you can see there's several stops. We're actually right at the next supply, like I mentioned. Boom, your next stop's going to be right around 30,000, and then, the real big one's up at 46. Hey, I love to see this up at 46. I would absolutely love to see this at 46, but not there yet. All right, so as I mentioned for today, I'm just going to show you this one because it was important for today. This was actually, why does it say the 19th? This was yesterday. I don't know why I didn't update it. I didn't update it because nothing really relevant happened out there. Let's go. Let's see. Yep, that was it. I think I covered everything I had to cover for today. All right, that's going to do it for me. As you can tell, the Blanton's is having its effect on me. I'm going to go take the German Shepherd for a walk. Oh, he didn't even lift his head. No walk for the German Shepherd today, but I'm going to go out and enjoy some sunshine. If you like today's show, give me a little like, comment down below the YouTube video. Of course, the email's there. A lot of you sent in questions, and I've been meant to get to some of those questions today, but I just haven't had enough time. I had too much time trading today and getting some other stuff taken care of. So if you have questions, things you want me to cover next week, send them to TraderMerlin@gmail.com. I have no guests scheduled, but I'm going to try to go out and get a couple guests just to spread it around a little bit and maybe get you guys some more exposure to other traders, other techniques, other tools. Monday is, for me, a new option selling day, so we'll see if Monday becomes a good option selling day. I'll let you know what those positions are on the Monday show. That's it. Hope you guys have a fantastic remainder of your weekend. Cheers, everybody. Be safe out there. Do something fun. Enjoy your lives, and I will see you all on Monday. Take care.